What's up guys, Ben here and welcome to Motivation to Invest. Chamath is one of the greatest investors of all time. He has a net worth of $1.2 billion and he started his journey, in his own words, in the bowels of Facebook, building that machinery. These days he's a venture capitalist and runs the investment firm Social Capital. The mission of Social Capital is to advance humanity by solving the world's problems. He recently made headlines by creating various blank check companies. These are investment vehicles which are designed to help private companies become public via what's called a SPAC merger. He currently has 3 blank check companies in operation with ticker symbols IPO-A, IPO-B and IPO-C. Now, IPO-A helped Sir Richard Branson's Virgin Galactic go public in October 2019 and now has the ticker symbol SPACE or SPCE. IPO-B is merging with a company called Opendoor, which is set to go public very soon. Opendoor has an interesting business model. It offers motivated sellers cash for their property via a simple online process. It then refurbishes the property and relists it for sale. Social Capital plans to provide $1 billion in cash in the transaction. So what about IPO-C? Well, previously I did a video about Cathie Wood and the fact that she'd been buying shares in IPO-B. So could she be buying shares in IPO-C also, and which is the next company Chamath is going to take public? Now, in that previous video, we speculated about various different companies, potentially Airbnb, and various other technology companies. But it turns out that there is a company called Clover Health, a healthcare-based technology company which Chamath has planned to take public via IPO-C. So is this company a great stock, and should you guys be investing into the IPO? Well, in this video, we're going to find out. Firstly, I'm going to play you a few clips from Chamath's latest interview to talk about the positives and negatives of Clover Health. Secondly, I'm going to deep dive into the investor presentation. And then thirdly, I'm going to give you my final thoughts on whether I would buy the stock or not. So if you're ready for that, let's dive in.
The entire goal was to ask the question, what happens if you built a technology-centric company that focused on consumers and physicians more than anything else and directed it into the healthcare market? And the great thing is we found this company, and this is why we are really excited after months of diligence and work to announce a merger between IPO-C and Clover Health to take Clover Health public. So what is this business? In the most basic form, what consumers need to know is Clover offers simple, obvious, and comprehensive healthcare plans for all of us. And so when you go to Clover Health and you sign up for one of their plans, what they also do is go to your doctor and give them very powerful software. That software is a combination of machine learning that takes all this heterogeneous data, clinical data, drug data, your lab results, your blood results, your genetic information, merges it together and allows them to give actionable insights and recommendations every time you see your doctor. That allows them to deliver better outcomes and lower costs. In fact, when you're a Clover member, you see 22% fewer hospital visits and 23% fewer ER visits. That is technology simply and efficiently improving everybody's quality of life. So when you have this kind of disruptive technology, the goal is to make sure that you're launching in a market that can validate it and then scale so that you can generate a lot of value. And this is exactly what they did. When you turn 65 in America, you have 2 choices. Number 1 is federally sponsored healthcare called Original Medicare, and number 2 is private insurance called Medicare Advantage. The reason to start in this market is that these are the folks that need the most help. They suffer the most chronic disease. Almost 7 in 10 have at least 2 chronic diseases. They rely on healthcare. They see a doctor at least 5 times a year. It is a daily use activity. And so by launching in a market like this, not only do you validate the technology, you get the benefit of some enormous tailwinds, which, as you know, creates for us a margin of safety. Number 1, it is the largest and fastest growing population cohort in America. Number 2, it is growing 5 times faster than any other group. Number 3, it has broad political support across the aisle from Democrats and Republicans. So this is a business that you can own not just through an economic cycle, but also through election cycles. It is a market today, just the private insurance for people over the age of 65, that is already $270 billion. And it is growing so fast that it will be an almost $600 billion market in just 5 years. The reason is because every single day in America, 10,000 plus people turn 65 and age in. And when they do, what that means is this is a market that is growing by $1 billion every single week. I have never had visibility to a market like this with this kind of defined, measurable growth. And so when you're a technology business that's cheaper, faster, and better than all of your incumbent competitors in a market this dynamic, what happens is you start to grow really fast. And this is exactly what's happening with Clover. Clover is already growing 2 to 3 times faster than their next 9 nearest competitors. It is a business that, when in market, takes 50% of every single new available member. Every year they compete with these legacy incumbents. What that's created is a business that last year alone did almost $460 million of revenue, and in 2023 will do $1.7 billion of revenue. Now, the setup here is for something that we also love, which is to create an incredible virtuous cycle. Because when you combine the power of technology and a great initial market and scale, you can build durable moats, you can build a defensible company that's very hard for laggard competitors to compete with. So for Clover, it works in the following way. They get into a market, they acquire a doctor or they acquire a member. Capturing that data allows them to run their learning, to use their software to help the doctor improve your quality of life every single time you see them. That saves costs. They reinvest all of that in growing faster, making the technology better, and improving the plan so that you continue to get more breadth of choice for less money. That consolidates a market, which brings on more members and more doctors, and the cycle scales. So when you bring all of this forward and you think about the future, here's what I see in a nutshell. Number one, what we have is a business that is actually delivering the promise of technology improving better outcomes and lowering costs in healthcare. Number two is a market that I think is huge and growing quickly. And number three is a business that is consistently taking share year over year over year. And so when you put all of these things together, in my opinion, this was one of the most straightforward investments I've ever made. It's a business that I think will become extremely valuable. It will build a lot of enterprise value and be what I think is going to be our next 10x and 10-year investment.
Right, guys, so now we've had those few words from Chamath and we've got a brief overview of the company. Let's dive into that investor presentation. Total shareholder return in the last decade. So it's talking about healthcare companies here. We've had Google 1.9 times the market, Facebook 2.9 times the market, and then these healthcare companies 4.6 to 5 times the market return. So healthcare is definitely a great area to be in, especially with the global health crisis. So it says it's a technology company, but that comes at a lower cost. So as you know, they have private healthcare in the US. Thus, these type of companies are very important for US citizens. So this company is growing 3 times faster than the industry. So Clover backdrop, healthcare spending in 2019 was $3.65 trillion. And that's in 2019, before this global health crisis. Average life expectancy in the USA is increasing from 78.6 to 80.7 years old. So people are getting older, they're living longer, and thus their requirement for healthcare is increasing. Individuals with over 2 chronic diseases. So we have 28% of Americans have over 2 chronic diseases, and then that's other figures for the rest of the world. So 81% of consumers are dissatisfied with their current healthcare experience. So that's where Clover Health plans to change this. Software that improves every interaction at the point of care. Clover Assistant is a combination of machine learning and an expert system. So this is bringing tech and health together. Physicians use Clover Assist to help them deliver better care to patients, better outcomes for members. So hospital admits per year, so it reduces that from 252 to 197, 22% fewer hospital visits, 23% fewer ER visits. The market's improving Medicare Advantage, supported bipartisan support by both the Democrats and Republicans, so it doesn't matter who gets in office, who wins the election, it's still a good investment. Worth $270 billion a day, this space is. Estimated worth $590 billion by 2025. So it's a massive market. 10,000 plus new people become eligible every day, with population getting older, more chronic conditions. Technology that delivers better outcomes at lower costs. Growth, so fastest growing Medicare Advantage plan in the US. So this is the fastest compound annual growth rate versus next 9 competitors. So it's around 27% compound annual growth rate, Clover, and it's much higher than the next 9 competitors. That is incredible. So they have great gross margins as it's more of a technology-based healthcare provider. 41% cheaper than Medicare, 17% cheaper than the nearest competitor. So 200,000 members already under contract for 2021, so that's a substantial number of people. They're expecting 450,000 members in 2023 expected, and that's also when they plan on becoming profitable, because the company is still unprofitable at the moment. So here's their cycle here, building a virtuous cycle with compounding advantages of scale. So they capture and synthesize patient data, apply machine learning to provide data-driven personalized insights at the point of care via the Clover Assistant, improve clinical decision-making to drive better care, share superior economics with members via lower cost and better benefits, drive strong market leadership, leading organic membership growth. So it's a positive circle of improvement there. So here's the merger details, IPO C plus Clover, the details of how much investment is going in there. So we've got IPO C, $828 million there. Clover is quickly capturing share from incumbents, and its differentiation will make it hard for others to copy. Direct contracting supercharges the entire business by creating a low-cost acquisition channel to cover more lives. Clover is the fastest growing Medicare Advantage company in the US. Medicare Advantage is the fastest growing market within the healthcare, broad regulatory moats and political support. Healthcare has grown faster than everything, including big tech. Growth, growth, growth. The team here, so CEO and founder, he's been at various companies. Andrew Toy, president and CTO, he's worked at Google.
Spade, right now this is a money-losing company. It does not make money today, correct? It's still losing money?
On a per unit basis, on an operating margin basis, it is almost at break even in profitability. By 2023, we will have overall profitability.
So that's Clover Health. I've blasted through that investor presentation to give you guys a brief overview. So what are my final thoughts on the business, and would I invest into it? Well, personally, I do like the company in terms of its numbers. Its investment thesis is very strong. I do like the healthcare industry at the moment. However, with me personally, I'm based in the UK. I'm not an expert on US medical plans, private healthcare, that type of thing. So for me personally, I'm going to give this one a pass. But if you do have some personal knowledge of perhaps using the Clover system or other similar healthcare systems, then I'd love to hear from you. So drop those comments below. Let me know if you've used Clover and what you think of it and what you think of it compared to its competitors. And also, will you be investing into it during the IPO? And if you guys found some value in this video, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.